Good afternoon, everyone. We're going to give folks just a couple moments to join the call. Certainly, if you have any questions in the short term, I'd love to hear them. If you just want to say hello, love to hear that as well. I am opening up the chat window right now. And at this stage, everybody should be able to chat. So feel free to drop a line, say hello, let me know you're here. In the meantime, I will tell you that the Q&A will be open, window will be open as well. So if you have any questions that you'd like to ask as we go through our coaching session today, please feel free to put them there. Happy to answer them for you, but we'll give folks just another 30 seconds to join the call, and then we'll kick things off. All right, so I will kick things off. For those of you that don't know me, my name is Brian Doyle. I am CEO and co-founder over here at vCIO Toolbox. And each Tuesday, if you haven't been in attendance in the past, we do an open coaching session. This is open to both vCIO customers and the public at large. We're happy to have anybody that wants to come in and learn a little bit more about the vCIO process or ask some questions. Join us on these coaching sessions. Today, we're going to focus a little bit on compensation models. And this is the compensation model we use. So I'm going to be very to the point in my compensation model today. There's a lot out there, but this is kind of how we ran our compensation when I was an MSP. It seemed that we seemed to have good success with this compensation model. And there are a few caveats within that compensation model. We did have engineers that were aligned to our vCIOs. For those of you who have heard me talk about the concept of the office of vCIO, that's how we really ran our department. We had vCIOs that were dedicated to the customers as the customer advocates and really ran point on the customer relationship. We had supporting engineers, 2 or 3, that were assigned to the QBR team. So they were the ones that were responsible for doing assessments or joining the customer kind of in an SE role when required during those vCIO meetings. The third person that was involved was our executive team. There had to be somebody where the buck stopped within that process as well. So, that was the person that final escalation went to. They could answer the question or no or no go if the need exceeded what was allowed for the vCIO to approve. And then finally, the optional component that we had was vCISO as well engaged. Obviously, the vCISO role is expanding these days, so we do suggest that a vCISO be part of your office of vCIO if you follow that model as well. Today, when we talk about compensation models, we're really going to focus on 2 components of the compensation model. We're going to look at vCIO compensation, of course, but also maybe how to compensate any supporting engineers, and we'll show you kind of our approach to it. Now, one of the biggest things I hear from customers is, really, where do you start with a compensation model for a vCIO? It's a little bit challenging because it's hard to measure some of the things that they're doing. Are they really influencing revenue through the QBRs? More than likely they are, but it's hard to say if some of that business wouldn't be coming in anyway. Now, some of the challenges out there is not all clients are in growth mode, right? So if I'm a vCIO inheriting a customer who had their big refresh last year, it's going to be tough for me to get a compensation lift per se with that customer. We've got clients that are already stack compliant, so some of that upsell, cross-sell opportunity might not be available to the vCIO because they are already using and aligned to products that align to our stack that we support. Other challenges are things that can be out of the vCIO's control, meetings that continuously get postponed, customers that don't buy into the process. Although I'll argue that's part of the vCIO's job is to kind of sell them on why this is important to them, why it's important your company learn more about them as an organization and better improve the relationship through those steps. And then other challenges are how do we measure that the customer's satisfied overall? A lot of us live strictly in the world of ticket surveys, right? And if we're doing ticket surveys, those are great for getting ground floor information in real time. We can often find out when problems strike, those problems very quickly come back through those ticket surveys. We get feedback, sporadically in many cases. Sometimes the decks get stacked with people that really like their help desk engineer and want to help him out or her out by doing additional assessments. So it can be a little bit skewed sometimes in response. Another challenge with those ticket assessments, though, is it really doesn't tell us if relationship risk is brewing at the stakeholder level, right? CEO submits a CSAT and the lowest person on the totem pole does it, they score identical. So, it's tough to sometimes prove out for a vCIO, are they really influencing the process? Because they might only be dealing with the stakeholders, and those stakeholders might still not be totally satisfied with your services, but we're getting good replies at the help desk or vice versa. And then another challenge I've seen, which have stalled many QBR programs, are how do you get the techs motivated to support the vCIO? In many cases, they look at this work as busy work, right? I'm being penalized. I got to work on one of those QBRs instead of something fun and cool, right? So we want to make sure that the techs have some skin in the game and understand that they're a critical component, because really they are the centerpiece in building the QBR. If they don't conduct the gap analysis, it's tough sometimes to build roadmap items because we don't know where those gaps live. Those roadmap items ultimately turn into projects. Those projects turn into revenue and profit, and that revenue and profit's what pays everybody. So we need the tech to understand that, they're the cornerstone of the circle of life of this whole process. And we got to really be able to convey that to each resource. So when we start looking at comp targets, one of the things that I want to share with you is how we did this intrinsically. So vCIOs, when we start talking about the comp targets they have to show for, we had allotted up to 20% of their standard compensation as a bonus. So I'm really bad at math, so I'm going to use round numbers here, but by no means does this mean this is what we were paying vCIOs. We could talk a little bit about that as well, but vCIO, salaries obviously tend to be regional. I'm up here in the Northeast, sitting between New York and Boston. Certainly, our compensation is much higher than some of my MSPs that might be in the Georgia or Midwest regions. So the way we did it is they had a bonus potential for an additional 20% over whatever their salary was. So if they were a $100,000 salaried person, they would have an opportunity to earn up to 20% more, or $120,000 at target. For supporting engineers, we're supporting the QBR process that might only be a portion of their job. You would give a portion of their bonus based on the metrics that tied to QBR vCIO support. So if we had an engineer that had an ability to get a 10 or 15% bonus, and we'll use that $100,000 again, and let's call it a 10% bonus, they would have 100% of their 10% bonus tied to that $10,000 uplift. 30% of that bonus that could be awarded would come from how they supported the QBR vCIO. So basically, if they were $100,000 and they had a 10% bonus model, they would be able to get $3 of the $10,000 eligible to them by hitting the criteria that came out through vCIO in, support. So again, to restate that, for vCIOs, they had a 20% target earning on top of whatever their standard base compensation was. And for the engineers, it was a percentage of their overall bonus. So if they had a 10% bonus target, the 30% for the QBR would basically be, about a third of that bonus mix right there. So that's how we kind of did compensation. Now, before I jump into the compensation from this point forward, I want to switch over to a tool that we're going to make available to you. For those of you that are attending today, we'll send you out a copy of our recording today, and with it, we'll give you a link to this tool. But this is our vCIO Toolbox Load Calculator. One of the standard questions I get from a customer is how many QBRs can a single resource support, right? How many accounts can an account manager / vCIO support? And this is really, what we work with. Now, there are some assumptions you got to take into consideration. Whatever we yield up here in our load calculator, if the engineer is not supporting them and the vCIO is acting both as the engineering resource doing the gap analysis as well as being the account manager, you have to reduce their load by 50%. Account managers need to be provided with time for prep work, after work, and engagement associated with every meeting. Executive support is there to support escalating, has to be considered when we make these assignments too. We want to make sure there's no barriers to succeeding on schedule because we're not getting the right answers, trickling down from the top that need to be shared. Thank you. Shared with our our customers or our clients. And then the customer has to be a mix of A, B, and C rated clients. If you're supporting only A clients that are going to have much higher level of demand, you have to reduce this number. And you could always use the vCIO toolbox account rater to kind of stack rank your clients and kind of classify them as A, B, and C. But you'll see here that if my target for vCIO is to do 16 meetings a quarter. So if we have 13 weeks in a quarter, we're basically saying at least one meeting a week with 3 that are kind of sprinkled out throughout the way. So as you can see over here on the right-hand side, we're talking about TBRs per week of 1.23 and a total count of meetings being 64 per year. In that mix, we've got 8 A-tiered clients. We've got 4 B-tiered clients and 4 C-tiered clients. And in this schedule, it assumes that our A-tiered clients we're going to go see every quarter. So 50% of the meetings that the customer's holding or that your account manager or vCIO is holding is with those A-tier clients. Each quarter, they're going to do 8 meetings with 8 of their clients that are considered A-tier, and we're going to do that every quarter. Then with their B-tiered clients, they get assigned another 8 clients there. But the difference here is they're only seen twice a year. So we see 4 each quarter, and then it alternates. We see Group A, quarter 1, Group B, quarter 2, Group A, quarter 3, Group B, quarter 4. So that's how we arrive at the meeting estimate there. When we have our C-tier clients, these are the ones that would only have meetings once a year. So that's your final 16 customers associated with your account. And you'll see here that in order to get to those, you're basically saying, I'm going to see these 4 and they're only meeting quarter 1, the next group of 4 in quarter 2, and so forth. Now, if I change this meeting to 12 meetings, and that's your target a quarter where you want a vCIO to maybe see just 1 a week, or actually 13 would be 1 a week, you will see that changes that mix to 32.5 clients, and you see how that cascades down with your assignments. If you want to try to stretch a vCIO and get them to, manage a patch of 50 customers, you'll see this here, and you'll see that they have to do 80 meetings a year, and this is kind of what the breakdown is. So you have to get down to, are you realistically staffed to support the ability to do 1.54 meetings a week? So before you even put this into anybody's hands, I'm catching a typo here, but before you put it into anybody's hands, I would take a look at your client base, and I would look at this and do some resource planning here. Hey, I've got 50 customers. If I think that, my vCIO can really do about 1.25 meetings per week on average, I'll put them into that 16 schedule, which means they've got to take 40 customers. And maybe me as the business owner, I'm still retaining 10 as part of my load. This will also help you with expanding your, when you're doing territory planning or expanding your team. All right, if I know that each vCIO can handle 40 customers, when should I be making those hires? Maybe as soon as I get to the point where I have 25 customers and beyond that 40, I hire another resource, but I split the territory and maybe I increase the velocity with a couple customers. So you'll see that this worksheet will really help you with determining, how you want to break out your meetings and how you want to engage your customers. Again, kind of looking at your A, B, and C tiering model is the way to support that. So certainly if you have any questions on the load calculator, drop them into chat, drop them into Q&A, love to answer them. But again, we will make this load calculator available to you as well. And just as a side note, we'll be going through this in deeper detail in just a moment, but we have kind of a breakdown of the compensation models here as well. So if you want to refer back to those after we conduct our meeting today, those will be available to you as well. But now I'm going to return back to the deck. And let's talk about the breakdown. So with a vCIO, I mentioned earlier that we were giving them, when I was running my MSP, a 20% bonus opportunity at the end of the year. This got away from compensating on individual deals, allowed us to look at things more holistically, and we did break up our bonuses into biannual payments. So, the vCIO would get a little taste throughout the year, and, hopefully we didn't get too burned on the other side. We actually saw improvement. Now, there's 4 measures that we look at when we're building out the plan: retention, revenue, meeting targets, and feedback targets. Each of these things, in our opinion, were things that we needed to measure our vCIO on. So I'm going to start out here with retention, and retention was worth 20% of their bonus. First thing we would do to even figure out what retention should be is we take a look back at previous year's loss rate. So we'd look at our churn from previous years, how many customers we had at the start of the year, how many we had at the end of the year, how many of them were lost to churn, and look to improve upon that metric. An example of that would be if we saw that for compensation purpose, if we saw that the previous year's churn rate was 3% of our customer base. If our vCIO could take over a patch of customers and reduce that churn rate below 3%, they would get 100% of that compensation mix, this 20% that's eligible to them, if it was matched or surpassed. If it decreased or increased by 25%, so let's say 3% went to 3.33% or 3.25%, whatever 25% might be on top of that number, we would give them 75% of their comp. So they didn't lose their entire comp, but certainly, we knew there was an impact in churn. It actually went up a little bit. So we do want to make sure that we're not giving full comp there. If it did increase by greater than 25%, and, at that stage, they would lose their bonus because obviously churn metrics weren't being met. We've lost customers. Certainly that's going to impact our business. If in a patch of customers, we lost more than, 25% more than the 3% we did the previous year, there'd be a material loss there, and we wouldn't award that bonus metric. Now, that doesn't mean they didn't get their entire bonus. It just meant that they didn't earn their 20% for retention. The next thing we would measure was revenue. Now, obviously, revenue is the critical piece of being a vCIO. One of our primary jobs is to uncover new opportunity, to obviously make sure that we're staying up on our tech stack alignment, that we're capturing any of those refreshes. But I'd even argue that the vCIO's role is to drive new business through innovation and really getting a better understanding of the customer. So we set a target growth percentage, and then we use that to guide the growth objectives. So if last year's client MRR growth goal was 5%, or I shouldn't say our goal was 5%, we realized a 5% growth last year. Well, we want to set the vCIO's target to be at a minimum of meeting that 5% growth again this year across their client base. And that's another critical component. We're not measuring it at the individual client, but we're looking at our client base. And if on January 1st, that client's base's billing was $100,000 a month, we would obviously want to see that grow to at least $105,000 per month within the year, which would give us an effective increase of about $60,000 of recurring revenue. Now, again, you can play with that number. If your growth model was more than that last year, increase that number. I'm just using this 5% as an example for round numbers. Once you set that growth target, that's really going to be, what we are using as our compensation benchmark. If it's met by 100%, compensation is granted. If we fall below 5%, this is a great example of where we're not going to comp. We haven't seen the material gains we expected. Because those gains are shared with the vCIO, we can't give that money to the vCIO if we did not see at least that 5% of MRR growth. So this is really what's going to light the fire under your vCIO to really engage with the customer at a deeper level and try to get that understanding, get more strategic, and try to drive new business that might be greenfield, things that haven't been identified yet. Now, if they exceed this by more than 25%, let's say they grew by, call it 7%, the MRR growth, and now you're really seeing some additional revenues coming back into your business. Well, if that's the case, you can award additional compensation. We used to give an additional 10% if they did that. So we would up their total, I mentioned earlier, 20% target. We would give them an extra 2% on top if they hit those compensation levels, because we definitely saw the value coming back to us. So that is kind of how we, pillar 2. Pillar 3 was meeting targets, and this is based on that load calculator we just talked about. So if I've got a customer, or if I've got a rep that's got 16 or 40 customers, all those customers have to be met in the cadence that have been assigned to them. So it's not doing 64 meetings with a variety of customers the best they can during the year, but really meeting those individual customers. Should the vCIO run into the challenge of not being able to secure a meeting with the customer because the customer is really unwilling to have that meeting, that's where we expect the executive sponsor to step in, make a call to that customer, let them know why, from a corporate level, why we're looking to do those meetings. And then if the customer absolutely determines that they don't want to do QBRs at that stage, then you can take that and give that as relief back to the vCIO, take that out of their mix or tell them they're still responsible for them, but those meetings won't count towards target. But it's one of the reasons in our process called the Office of vCIO, we're really looking for the executive sponsor, because we have to make sure that we're doing our best effort to get in front of the customer, because client retention is critical on that. And as sometimes our value gets tested when we're doing things the best, right? The more we automate, the more we do remotely, the less we're on site and less things break. So if we're not staying in front of our customer, that value can get called into question. So in this model, basically, once we identify what the load is, let's use that 16 meetings per quarter, they'll get 100% of their compensation if those meeting targets are met. We have to schedule it per the load calculator, and they have to take the meeting to the complete process within vCIO. We see a lot of vCIOs forget to close their meetings at the end. Then they start doing the next set of meetings, and they haven't locked in that historical data so you can prove trends and show where improvement is. So we also want to make sure that we've got quality assurance going on in this process. So if they don't close out those meetings, complete them, and archive them, they shouldn't get credit for the meeting actually being done when it comes to compensation time. And we base 20% of the target on, having these meetings, because we want to make sure that they stay in queue and they're getting conducted. The final thing is really feedback. We want to make sure that we're getting some feedback inside vCIO Toolbox. As many of you know, we have a customer experience module where we have pre-built CSAT and NPS surveys. You can build your own surveys. We have project summary in there as an example as well. These are things to allow you to basically engage your customer in between meetings. We consider this to be a critical step with your key stakeholders to do a few times a year, especially those customers you're only doing, biannual or annual. So if we took CSAT and NPS, for example, we would tell our customer or our vCIOs that we wanted 2 CSATs and 2 NPSs to go out a year to each key stakeholder and do them in alternate quarters, right? So it would be CSAT, NPS, Q1, Q2, CSAT, NPS, Q3, Q4. Then we would measure them on response rate. We wanted them to have a 75% response rate. These are with key stakeholders, people they should be engaged with, people that they can pick up the phone and say, hey, we haven't gotten a response on your CSAT. Can you do that to help me out? Can you kind of help us? Because we want to make sure that we're improving, but be able to push them based on the relationship to answer. They should be able to call them and tell them that they're coming before they even send them out, so they know that they're coming. These are ways to stay engaged with the customer. And we want to make sure that we're seeing that response rate coming back. And then if you want to have, a response based on scores, feel free, but a lot of times those scores could go beyond what the vCIO is capable of, in our opinion. So we used to do it on response rate just to make sure that we were seeing that the customer was engaged with us and working with the vCIO versus the scores. Because if you got a bad engineer or you had a bad hiccup that was out of the vCIO's control, but they stayed in the game and worked as the customer advocate, taking the heat during that problem, it's not going to reflect in a feedback score. So that's at least our logic for why we didn't measure it on the scores. We measured it on the response rate. So those are the targets we had with the vCIO. Now I'm going to go quickly into the engineering targets, because I know we're getting near the end of the time. But I will say this, when we're going to comp a technical support person or an engineer, it only applies if you're really formalizing QBR support as part of their job. Now here it says having a formal group of engineers. That doesn't need to be the case. If you've got one engineer who's going to do the gap assessments, because that's the person you assigned, you should give them the ability to get compensated potentially on the work that's being done on the QBR as well. Now, as I mentioned at the top of the call, this would be a portion of whatever their traditional bonus is. So again, that engineer making $100,000 who has a 10% bonus opportunity, that bonus could be up to $10,000 earned and worth 30% of that earned bonus. The other 70% lives with whatever his technical personal growth objectives are in the standard components of his job. In terms of retention, we weigh retention heavily here, though, on the engineers, because our engineering team is generally what drives retention, right? If we have good engineers on staff, people that engage with the customer, they're getting the job done, the service desk response in time, all those things, play into the customer experience and the customer relationship and can make or break it. So we really look at retention as a key number to evaluate here. If our previous churn rate was 3%, they'll get 100% of that slice of the compensation if it's matched or surpassed. If it's increased by less than 25% or decreases by less than 25%, they will lose 25, or they'll get 75% of the compensation. And if it exceeds by more than 25% or goes to 4%, boom, no compensation for that sliver. In terms of revenue, they're not in control of revenue. So we gauge this very smallly, because where they can contribute is as a stealth salesperson. And what I mean by that is my best techs were the ones that would gain the trust of the people that they worked with because they were looked at as a technical resource, but knew how to uncover opportunity or listen for opportunity or spot opportunity. And then they would feed that information to the right people in the organization to then pursue. Usually with a caveat. My old partner used to tell me, hey, here's what I learned today. It's not happening for 3 months. Do not call for the next 4 weeks on this, because you still will have time. If you call in the next 4 weeks, they'll know it came from me, and then they'll stop talking to me. So, that's a kind of an example of where the engineer can come into play and really uncover information just through doing their business and maybe even having lunch with these guys that we might not uncover as salespeople. And again, revenue here, if our growth was looking to be 5%, we do it very similar to what we did with the vCIO. For this benchmark, they get 100% if compensation is met. If it's exceeded by more than 25%, you can make an award on top. If that growth target isn't met, they lose this 10%. But again, it's not as big of a sliver as it is in the vCIO side. Now, meeting targets are a little bit different for the engineer. Their contribution to the meeting is getting the gap analysis done in a timely fashion, right? The assessment. They will get their, and that's why the meeting target is pretty high too, at 30% of compensation, because we want them to know, as they're the cornerstone of that circle of life I mentioned earlier, that they are being rated on the amount of meetings that they are conducting and getting them done within 2 weeks of being assigned that meeting. If you guys are familiar with our process at all, we usually suggest a 4-week timeline for entering into a meeting. This gives everybody who has to touch the report enough time to get involved with it, with their day-to-day activities as well. And we want to have our technicians complete these assessments within 2 weeks of them being assigned to them. This should give them enough time to work it between tickets and fires that come up to finish those assessments. So if they do that for 100% of the meetings that they're assigned, they will get their 30% target bonus. And finally, the last thing is, of course, those feedback surveys again. In this case, they're being graded on the results because the engineers are often the key thing involved in the results. And if the engineer gets hit on this one, this gives them an opportunity to work with those service teams and communicate internally over there, that their compensation is being bumped because help desk isn't responding quickly, and will help us uncover other areas where we can optimize. But basically what we're saying here is we expect that we're going to get good scores. If our CSAT scores are over 90% and our NPS scores range from a 9 or above, in our responses overall, then they will earn this 10% sliver as well. Again, this is a small sliver. You saw that there was a couple 10% slivers within here, because these are things that are not entirely in the engineer's control. So that's really how we did our compensation. Again, to recap, we basically assigned a bonus amount on top of each type of salary, vCIO salary and engineer salary. This eliminated looking at individual customers or individual projects. We then break it down to 4 topics: retention, revenue, meeting targets, and feedback targets. And then depending on which seat you're in, the weight of that, that earning for each one of those targets is based on what you can directly influence and where you're most involved. So that is kind of the compensation model we took to the market. Play with it as you see fit, see how it compares to yours. Certainly love to take any questions, concerns, or comments that you might have regarding what I shared today. And again, I reiterate, after this meeting is over, we'll get this video out to everybody. And with that video, it will include the load calculator as well as a downloadable link. So how does so a question that's been presented is, how does compensation affect the cost of vCIO service plans to the clients? So I'm going to answer this in two ways. I see two things out in the marketplace. There are customers that are just using the vCIO to support QBRs. So that cost is already being borne as part of your service contract. So however you arrive to your service contract, number, whether it's per seat, whether it's per employee, whether you're just coming up with a fixed cost, you do have to put in some element of, cost share that goes to the cost of conducting the QBR and doing those vCIO efforts. So, in terms of, for those that are just doing it QBR, you got to do your back end math and say, look, if I have to grant the full $120,000, am I supporting that through the revenue I'm collecting and what I'm projecting in growth? And does that, get me that plus, 3.17 or whatever your multiplier might be that you're using internally? Now, if you switch to folks that are doing a fractional vCIO plan, this should be pretty straightforward, because now you're looking at the cost of a resource and saying, how many customers do I need to get at $2,000 a month to pay for the resource and then pay for their bonus? If I could support up to 16 customers where I'm getting 1,000, 2,000, 3,000 a month for vCIO services on a fractional basis, and then I'm engaging them there, I should be able to cover this contract very easily, the compensation models listed here very easily, and make revenue on top at that standpoint. For those of you that have been on my coaching calls, I think there's a huge opportunity with all the changes going on in technology to certainly build an organization where you have fractional vCIO as an offering. I think we give too much of it away, as part of the QBR and going beyond with our customers. It's the old scope creep, but now on a professional, kind of a business development level. And we need to engage those customers a little bit better. So, I would look at your compensation costs across the board. First, determine if you're doing it as part of your QBR mix. If you are you putting in enough cost for the QBR against all your service contracts? And then the second thing I would look at is, revenue uplift. Are we seeing the revenue uplift that we need? And then if not, look at your fractional models and say, is it time to start looking at this service and peeling back some of it and really going after it from a fractional vCIO level? So I hope that answered the question. Certainly, Lyle, if you have any additional questions on that, we could take that one-on-one as well. Any other questions or comments that I can answer for anybody today? And again, this doesn't have to be only about compensation models. If you have any other questions about the world of vCIO that you'd like to put out there, let's call this the Ask Me Anything section. If not, I'll keep the floor open for a couple of minutes. I know we've gone past our time, so if any of you need to drop off, please feel free. For those of you that are staying behind, if you do have any questions, let me know. Otherwise, I will share that you can always email me directly at bdoyle@vCIO Toolbox. I'll be happy to answer any questions that you want to, ask and go through privately. And, as always, I'll say that each Tuesday we do these meetings, travel permitting, and, we do these coaching sessions. If you have any topics you'd like to see us, chat about, if you've got any questions you'd like answered, we'd love to hear them. We have to come up with content every week. So we'd love to hear from you guys so we can build content that matters, content that's asking the questions that you have. And with that, I'll thank everybody for joining me today. And I look forward to seeing you again next Tuesday. Take care.